Okay, I wanted to share a trade, zero DTE trade that I did on Monday, July 22nd. Okay, and so I wanted to share this one just because of what occurred during the day, and then what occurred during the trade and after the trade was completed, and it kind of goes to speaking about some of the rules that I have for zero DTE and how important they are. Okay, and so let's start out by just talking about how I initially go into a trade, and I look at futures overnight prior to the trading day, and we had been going up and up a lot. And when I see the market going up a lot, I kind of want to take the counter move of the trade. If it's trending slowly and in a move that's not extended per se, I'll try to go with the trend. But if I see something that's extended, especially pre-market, I'll tend to want to take the counter move of it, and that's exactly what I did on this day. All right, so let's start out by going in. I took the trade early, very early, right at 9:30. The reason for that is because volatility is highest at the beginning, and you want to use volatility in your favor. So the higher the volatility, the better. Obviously not to extremes, but the better. And as the trade progresses, you want volatility to go down. That's the ideal. Obviously, we don't get that all the time, but that's really the ideal. All right. So I came in at 9:30, and I do load these up prior to the trading day and look at the premiums and where they are. And this trade, particularly 29.95, I use ES, by the way, to trade. We were about 12, 13 handles away from the market, so I was comfortable initially. Okay, and so right when I got in, the market went up a little bit and then down, which is exactly what I wanted it to do. But you see here, what happened is that it went down. I think the premium went down from 40 to 30, and then it just reversed, right, and went right back up. And I honestly was looking to possibly exit this trade at this point. And so, I knew that 70 was pretty high, and that's not so much my concern is the number, but it's really the distance to the market. And by this time, we were less than 10 handles away from the short leg of this, from 29.95 on the SPX. And you never want it to get really, really close, because then you've got a escalating premium, especially early on in the morning. And so I knew that it couldn't go above this level right here, and I was ready to pull the trigger to get out. But we did reverse, and so that reverse became a pivot, and the market went down. And so I felt pretty comfortable, until it started going up again. And what happened was it went up to the support level that I have on the 1 hour, and then retreated down. And basically what occurred here was that I had set a profit target to 10, and the reason that I set it to 10 was because from 10 to 5, actually, since you may be waiting a couple hours or 3 hours to get that 5 cents, and it's just not worth it. Sometimes it's not worth it even 10, and I was contemplating closing the trade at 15, but once we got this nice dip down, I did close the trade at, I think it was 10:57, right before 11 o'clock. So in the trade for about an hour and a half, closed it at 10, and I did want to speak about my rule here, and I don't let things expire. And the reason I don't let things expire is because anytime you keep a position open, basically you are allowing risk to settle in. Okay, time is risk, and so you want to close out these trades as soon as possible, because they can just go against you. Okay, and you can see here what happened, right? After I closed this trade, we didn't go down any further, right? So I would have been waiting a very long time to get that nickel out of that trade, and probably if I didn't get 10 cents, I would have closed it a little bit higher, right? So you don't want to leave profit on the table. And so what happened? Well, the market went way up there, and the high of that market was 29.90. So you can imagine if you're sitting here waiting for that position to expire and it goes up to 29.90, you're five handles away from, you know, five handles away from the short leg of the trade here, and you probably and you were sitting on a very nice profit down here. Okay, and that's really the reason that I closed these trades out. And I wanted just to emphasize, right? From the time that you close that trade, or if you leave it open, this is really risk in the market, and you want to eliminate that risk as much as possible. That's why I close out these trades, and I close them at 10 generally, unless we have a really hard trending market down or up. That it'll wait a little bit longer to close it at 5. But in this case, it wouldn't have worked out, and we would have been sweating bullets here at the end of the day here to close out this trade, and it's happened before. All right, so hopefully this was of value to you. Just a typical 0 DTE trade, and that's it for today. Thanks.